All right, guys, the day has come and the Fed has cut interest rates. Should you go refinance right now? The Fed cut rates. Now what? So I wanted to do this live stream because there is a ingrained when it comes to mortgage, it's just ingrained to us to always be searching for what's the rate? What's the rate? What's the rate? Should I refi? I have so many conversations with people over what the rate was 3 years ago, 5 years ago, six. Does it make sense now? We are rate chasers. That's what we do. And I understand why, because most of us were brought up this way, meaning you get a mortgage, you get a 30-year fixed mortgage, typically is what most people end up doing. Some people do 15 because the rates are a little bit lower on the 15, but most people in general are going to go for 30-year mortgage because it's got the longest payment. Excuse me, the lowest payment for the longest amount of time. Now, we got to think about this when these rates were, when this mortgage was first initiated. Now, specifically on the conventional side, this goes back to 1938. That's when this mortgage was first set up, put in place. Okay, so back then in 1938, you got a job. You typically stayed at that job for 30 years. You stayed in your house for 30 years and you retired. That's how this was put together years ago. Guys, it's 2025. Needless to say, things are a little different now. Our lifestyles are different. The world is different. The way people move as far as home to home, relocation. There's so many things that are so different now. And this is the time for something different. Now, again, a lot of people need to refinance, right? A lot of people in this market need to refinance. So a lot of people are super excited about this rate cut, me included, because it does help a lot of people that were not able to qualify maybe earlier in the year. Now they can. Now, keep in mind, typically as interest rates go down, pricing goes up. We're at a very interesting time right now because I did a video about this a few weeks ago, because we're about to hit the fourth quarter in a couple of weeks. And so typically things kind of slow down once you hit that October, November, December timeframe for obvious reasons, especially in November and December. But there's a different way, guys. The rate chasing, again, I understand for a lot of people, it makes sense. Or for a lot of you guys, if you are in a home, you're going to be there for a while, maybe even with the mindset that you're going to pay it off. There's a different product. We've got it. We've got a different option for you. It's called the all-in-one loan. Now, if you like to continue to pay your mortgage company thousands upon hundreds of thousands of interest, because that is typically what we all do, myself included, before I came across this product, you go right ahead. And for some people, they're going to have to do it that way. And it's not a bad thing. What I'm about to show you is for people that have been established in a home for a while, and maybe retirements, maybe a couple decades or so. It's not for everybody. It's not for everybody. But this all-in-one product that we have, this all-in-one loan, is incredible. I'm going to give you just a little taste of this because it's too much to go into in a video that is only going to be maybe 20 minutes, because that's about how long I'm going to show this. But this is such an incredible product. This is the only, and I mean only one, mortgage in the country where it's principal paid first. Let me say that again. Principal paid first. Do you understand that when you're making a mortgage payment, the majority of your payment for that first decade is interest? The overwhelming majority. Like we're talking 70-75% of your payment is going towards interest. At year 20 on a 30-year mortgage, your balance on your mortgage is typically still around 50%. Yeah, let that sink in. Okay. Now, let me be very clear. I'm not completely bashing a 30-year mortgage by any means. I'm giving certain people an alternative to chasing the interest rate because that's what everybody's going to go do now. Fed cut rates. What can I refinance? What does it look like? What's my payment? You know, people keep mortgage payments around like they're like a kid. You don't have to keep a mortgage. What if you can just get rid of it? How would that change your finances if you had no mortgage, but you still got the house? How would that change your financing? Whether you're 10 years, 20 years, 30 years from retirement or not. What if you can have the house and get rid of the mortgage in a fraction of the time? That's what this all-in-one product is. It's all about. It's incredible. So I'm doing a full webinar on this, and then next week I'm going to make sure that you're going to hear all about this because there's the need for a new product. Like we've been doing the same thing over and over and over and over now for 90 years, essentially, right? There's really been no change in the mortgage industry as far as the different products. It's pretty much the same thing. 30-year fixed, 15-year fixed. You got ARMs, which people have been turned off about by an ARM since the 08 crash. And I will tell you, there's nothing wrong with an ARM if you know how to use it. It's definitely nothing wrong with the ARM, but you know, they got a bad reputation. But I want to just share this with you and give you a taste. We have to rethink mortgage. We just do. For a lot of people, that mortgage payment is hindering or putting a big dent in their pockets as they get closer to retirement for a lot of people. For some people that are not even close to retirement, the mortgage loan is the majority of a lot of people's income. That's where it goes. All that money, all of it, going to a mortgage payment, and most of your mortgage payment is going to interest. This is flipping the mortgage literally like on its head. Okay, so we know how mortgages play a critical role, obviously, in the housing. Housing is such a big part of our GDP here in the U.S. That's why it's such a big deal, right? I know the younger generation may have a different thought process when it comes to homes. I think everybody wants to own a home, but the affordability, obviously, over the last few years, it's been crazy. It's been very challenging for people. The crazy thing is that the interest rates drop today. The employment is not great, but inflation is still high. So I was listening to Jerome, it's my boy, Jerome, today talk, and he's very perplexed at this situation with unemployment being high, inflation still being high. That's typically not how this works. Usually if unemployment is high, we don't want to have high inflation because now it costs more money to get things, but you got less people working. So it's a very interesting time right now. I don't think there's a lot of pressure from the president and everyone else to lower these interest rates, but nonetheless, rates have been lowered. We'll see what happens moving forward. But I want you, for certain people, get out of this refinance rate chase. Okay. For some people, again, reducing the rate makes sense. For a lot of you guys, this is the way to go. It's called an all-in-one loan. The only principal paid first mortgage in the country, period. Okay. So let's look over here. So I'm just going to share a couple of things with you guys because I don't have time to go into the entire explanation about the all-in-one loan. But essentially, borrowing money costs money, right? We know that. That's interest. You borrow money, you pay interest. That's how mortgage companies make money. You pay that payment for 30 years, they collect the interest. Rates drive perceived affordability. So we're in that right now, right? As interest rates rise, markets slow. As interest rates fall, markets accelerate. Interest rates just fell. What do you think is going to happen to the market? It's probably going to accelerate this next few months anyway. To offset the cost, borrowers show lengthy terms. So again, 90% of loans, guys, are 30 years. 90% of loans are 30-year fixed mortgage loans. The U.S. housing debt exceeds, it's actually 14 trillion now. Let me say that again, 14 trillion with a T. That's mortgage debt in this country. There's a better way. I promise you guys, there is a better way. Okay, so beyond the mortgage, I mentioned this briefly. Retirement income and the security crisis. So 50% of households are not saving enough money to fund their current standard of living during their retirement years. 50%. So of that 50%, again, a large chunk is the mortgage. It's the mortgage. It's the mortgage and it's the interest. So what do we do about it? Well, let's take a little look at this right here. So 40%, 42%, excuse me, mortgage. Look at that. All other debts combined. The mortgage itself is 42%. This is of income, of people's income is what this number is reflecting. Of the payment, look how much of that is going to principal, look how much of it is going to interest, okay? So the cost of actual financing real estate is one of the biggest obstacles that America is facing. And I'm getting older, more mature. You want to say my age, don't worry about that. But this is hitting home for me. It really is. And a lot of people that are kind of getting close to, I'm getting close to being an empty nester soon here. And again, you don't have to be at that stage of life to take advantage of this all-in-one loan product. Okay. So real quick, and then I'm gonna get out of here. Again, I'm gonna do a complete full webinar on this and explain more in detail how this works. But I need you to open your mind. I know all we know is 30-year and 15-year. What's the interest rate? What's the payment? There's another way. There's another way. This is it. So typically mortgages are one size fits all. So pros. Now I touched on some of this a little bit. Pros: low down payment, right? Familiarity. Again, guys, developed back in 1930. We're in 2025. It is time for something new. It's a time. Readily available, payment dependability. So you make the same principal and interest payment. You get a 30-year mortgage, that principal and interest payment, same payment every time, all the time, unless you do a refinance and chase the rate, right? Some people, it makes sense. There's another way. But this is typically what's ingrained into us in this country is 30-year fix, 15-year, 15 years better because it does cut down on a ton of interest. You do have a higher payment, so it doesn't work for a lot of people. The other thing to keep in mind is that a lot of people will say, well, I make an extra payment or I'm going to make an extra payment to cut down on that interest. Okay. The reality is that's less than 4% of people in this country do that. 4% of people in the country actually make that extra payment to cut down on the interest. Everybody else, they make that same payment every single month. Now, taxes and insurance, obviously, we know can change, but the principal and interest payment is the same. It's the same. No matter how much you put down on the principal, once you get that 30-year loan, your payment is the same, unless you do a recast, which is a whole nother story. You don't have to chase rate anymore with this product. It's incredible, okay? So let's look at the cons of the one-size-fits-all mortgage, right? Slow, takes decades to repay. We know that. Inefficient, interest costs are paid primarily first, as I said, with the repayment schedule as it is. It's interest, 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 interest for years before you really start making a dent in the principal, okay? You can't take money out. Once that payment's made, it's in there. You can't get it back, right? Once you make your mortgage payment, you pay it, you can't get it back. It's just gone, right? You can't go grab some money out. Oh, hey, I need to borrow that back. No, you can't do that. So that money, once you make that payment, it's gone. Now, again, could you do a cash out refinance? Yes, but obviously, well, I shouldn't say obviously. In the state of Texas, there's limits to all that. We've got another option. We've got a much better option than having to do a recast or having to do a traditional refinance for certain people. This is going to work for you, okay? Expensive. This, again, we're talking about cons for a traditional mortgage. So refinancing is typically not free. There's going to be some type of cost. With CMG, of course, we actually, up to 5 years, we actually will refinance you with no cost we don't charge anything. It doesn't mean there's no fees, but CMG as a little, we don't charge anything. So it's a very super inexpensive refi if you do it with us. If you've been a CMG customer, it's a very inexpensive way to do your refi. But there's still some cost related at title and some things like that. There is another way, guys. There's another way. So this is not going to work for everybody, but it's going to work for a lot of people. This fits. The debt to income ratio is a little different than traditional loans. There's some things that I can look at to see if this fits. But again, this is the only principal first mortgage. Only one in the country. There's no other one. There's not another option. This is it. So do me a favor. If you have interest or you know someone that has a mortgage, they're thinking about doing refinancing, right? Rates just dropped. A lot of people are thinking about it. Before you do it, hit me up. I will run numbers for you. I will see if the all-in-one product is a good option for you. It may or may not be. I don't know until I look at it, but I'll do all the work. I'll do all the work for you to make sure you're not just throwing away money on interest, right? If there's a way for you to save $100, $150, $200,000, depending on your mortgage, is that something you want to do? Let me say that again. 100, 150, 200, could be more depending on how much your mortgage is. You could save that. You can save that. What does that do for you financially to be able to save that money and not give it to the mortgage company? That's what this loan is all about. So I'm going to have again, I'm doing the webinar. It's probably going to be not next week, but the following week. So that's like the first week of, last week of September. I'm going to post about this. If you've got questions about this all along, you do not need to wait for the webinar. Hit me up. I will give you all the information. I'll do a quick presentation. It doesn't take long. I can run through the numbers for you really quick. See if it makes sense for you. But don't just run out and refinance now. Don't drink the Kool-Aid right now until you look at this option. A lot of people are going to drink the Kool-Aid because we've been talking about interest rates all year. And now we got the first cut. This is the first cut of 2025. Today, this was it. We haven't had another one. The expectation is that we may have a few more. We'll see, but there might be another option for you. So don't just go run out, refinance because you're getting a ton of marketing. You're going to get inundated. Veterans especially, all right? I am a veteran. Call me. 281-800-5755. Send me a DM. For us as veterans, we're going to get inundated, right? Call me. Let me help you. Let me look at the numbers for you. Let me see, because maybe the all-in-one could work for you, right? We don't know. But veterans, we really get hit up when it comes to refinancing. A lot of us do. So if you're a veteran especially, and you start getting these IRRLs, IRRL, okay, you're going to start getting, I promise you, you're going to get, if you haven't already, you're going to start getting solicitations to refinance your mortgage. Call me, text me, send me a DM. For everyone else, please don't go refinance right now until you talk to me. Let me see if it makes sense. Let me see if this all-in-one is a better option where most of your money goes to the principal. You're not just paying interest over and over and over again and recycling and waiting for the next rate refinance. You may never have to refinance again if this all-in-one product works for you. Okay, all-in-one loan, it is exclusive with CMG, guys. It's incredible, and again, it's hard for people to wrap their minds around how powerful this loan is because they don't know about it. They don't know about it, and they don't know it exists. People still think they have to just keep their 30-year fixed mortgage and make payments. There is another way. So if you cannot tell, I'm very excited about this. All right. So for good reason, this is an opportunity for me to help people save literally hundreds of thousands of dollars in interest. That could change a lot for most people, not having to give that money away in interest. So I'm going to post Stay tuned. Please check my social, especially on Facebook. I post a lot here for the webinar, but you do not need to wait. Hit me up if you've got a refinance question. Do not run out and just go refinance. Let me help you. Let me help you save some money. Even if it's a traditional refinance, let me help you. I can just answer questions for you before you go follow the crowd. All right. Have a great day. It's a good day. We got a rate cut from the Fed. Mr. Jerome, that's my boy. By the way, my middle name is Jerome, so I can talk to him like that. That's my boy, Romy Rome, Mr. Jerome Powell. All right. All right, guys. Give me a call. Send me a DM. Shoot me a text, 281-800-5755. Talk to you guys.